it looks like the audience wants a little bit more information on how you scale into
I
positions.
could have told you that was going to be the winner. All right. So how I scale, I think something that is probably a good example would be, well, Square's probably a good example. Twitter's probably a good example too. Let's look at Twitter.
All
And
right.
this is this is a stock that we own right now. And this came off of a little bit of a sloppy low cheat back on, let me just get the right date to make sure I'm giving you the right information. Yeah, so we bought it on 4/7.
Okay.
It was actually, it came through that low cheat and the next day pulled back a little bit, and I started buying it as it turned up right there. So this is one where I took a partial position here because I felt like, it's going to run into some supply and probably still build the right side, which it's doing perfectly. This is very natural. And now if this sets up here and can tighten up and break out from this most recent pivot, which now I call a cheat, uh, I will I will add to the position. I'll add there. So actually paying a little bit higher, but I'm not going to just add just because the stock's up. A lot of people say, well, what do? You add when it's up 1%, 2%, 3%. No, I'm only adding from resets, another pivot, and almost always it's going to be higher. Virtually, 99.9% of the time, that pivot's going to be higher. I want it to be at a higher price. If it's lower, I'm at a loss, and I'm probably not looking to add. That would be averaging down.
Hmm.
So again, this needs to set up that right side. Square, of course, we talked about. It's also setting up and could set up that handle, but that would be the way that I would pyramid into a name.
We talk a lot about, a hypothetical portfolio. You have 10 stocks with a full position being 10%. How do you determine what would be a partial position to you? And then what percentage are you adding when you do get that new setup typically?
Yeah, it's really that's really a very personal decision that your level of concentration has got to be
Mhm.
based on a few things. One, your own risk tolerance. So, and there is some optimal levels. I mean, if you're a 2-to-1 trader, if your average gain is 2 times your average loss and you're 50% batting average, your optimal trading position is 25%. That's what optimal F or the Kelly formula would tell you. So that would be what you'd try to shoot for optimally. I've also found that to be sort of the sweet spot, and again, that's not where you want to always be at that point. Maybe you're just getting into the market and you're coming from cash. You take 5% positions or 10% position. You work yourself up to bigger positions. I'm taking gigantic positions right now with what I've been doing this year, and that's I tweeted just recently. When you're in the U.S. Investing Championship, if you want to win, you got to trade like an animal because the other guys are trading like animals. It's kind of like sports, the
Mhm.
NFL guys, they got to take steroids because the guy on the other side of the team he's on steroids, so you got to do what you got to do. But again, I've been doing this for 37 years, so I would recommend that you never have a position size probably bigger than 50% of your portfolio. 4 stocks, full margin, and optimally maybe 4 stocks. You divide it into 4 or 5 names, and you'd be maybe 8 or 10 names if you were fully margined. So that's sort of the optimal level would be, in that 25% for your biggest position sizes.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.